Bitcoin and AI. Those are two of the biggest, most profound innovation platforms in history. One of those is moving into its own S-curve, moving into prime time in terms of adoption. Bitcoin fits right into this new world as the payments ecosystem. So, but in terms of the convergence, so each one into its own S-curve, and these are massive growth opportunities, just massive opportunities. And so what do we have here? We have S-curves feeding S-curves because of this convergence. That's what you're feeling. And so it's going to create for these converged platforms super exponential growth.
Since its inception, Bitcoin has been revolutionizing finance as a multi-faceted currency. As one of the most disruptive innovations in history, Bitcoin's potential for immense growth is undeniable. But one thing many analysts are not accounting for are the innovations that can come about when Bitcoin coincides with artificial intelligence. This is a powerful message from ARK Invest CEO Cathie Wood. Cathie firmly believes that Bitcoin's surge is not a matter of if, but when. Cathie sees a future where AI's supercharged innovation meets Bitcoin's decentralized financial network. This powerful combination, she believes, will trigger an explosion in productivity and completely reshape economic systems worldwide. It's exactly the kind of disruptive innovation that the world needs, an opportunity to unleash tremendous growth and redefine traditional economic principles. Make sure to stick around to the end of the video as Cathie Wood reveals why Bitcoin is set for massive adoption and growth over the next few years. Also guys, if you enjoy finance content, consider subscribing to the channel or liking the video. It's free and you can always change your mind. But without further ado, let's jump in with Cathie Wood.
I think the reason the world is going to feel chaotic, even to us in some sense, we've been disappointed by some earnings results because, in the AI world, things are happening that we wouldn't have expected. So it's moving very quickly. And I think there is, if you look at consumer sentiment metrics out there, you'll see the consumer is kind of down. The consumer is not feeling very. Now, I think a lot of it is where the price level is in the economy, but a lot of it also is if you look at surveys of people making $100,000 or more, their fear of losing their jobs is moving up dramatically here because of AI. And if unemployment follows with this line, it will end up somewhere in the 6 to 7% range in the next year or so. So that's something that's happening that's unsettling. This is much like the late 1800s, early 1900s. Telephone, electricity, and internal combustion engine going to change the world completely. And society was very uncertain, unstable. There was a lot of angst back then, and I think there is so. Innovation, all of the innovation I'm talking about has huge ramifications for wealth creation and standards of living, right? Productivity gains. We think productivity is going to absolutely boom here, and we think real GDP growth could appreciate from where it's been in the last 125 years. Real GDP growth from 3% at a compound annual rate, with China bringing up the rear recently. We think that will go to 6 to 8% during the next 5 to 10 years. Most people think that's nuts. The other side of it, though, is this is highly deflationary. All of these technologies are deflationary, and that's why Bitcoin fits right into this new world as the payments ecosystem. So, but in terms of the convergence, so each one into its own S-curve, and these are massive growth opportunities, just massive opportunities. And so what do we have here? We have S-curves feeding S-curves because of this convergence. That's what you're feeling. And so it's going to create for these converged platforms super exponential growth. Most people in our business, this is the equity business for the most part, do not even understand exponential growth. So exponential growth, if you're at a decent growth rate, means you'll sustain that growth rate instead of law of large numbers decaying the growth rate, right? Super exponential means you're not only going to sustain a growth rate, but it's going to accelerate because of these convergences. So that's what's exciting about that. And in terms of AI and Bitcoin, well, I think, our Bitcoin brainstorm on that convergence when roast beef, anybody know who roast beef is? Yeah, everybody knows who roast beef. So he was, I think, in Africa at that moment as we were doing brainstorm, describing how the convergence of Bitcoin and AI was completely redefining really labor, the distribution of labor.
What does the world look like? How are you, if capital allocators in the room, other than just pounding and buying, using their entire cash position and buying Bitcoin, obviously, but how do you look at, you mentioned a number of different ways in the future, but like in 15, 20 years from now, what does the future look like?
Well, in terms of, you're talking about in terms of investing and getting on the right side of change. What is so interesting, I hope you don't mind my talking about this, but I'm on the warpath here on this particular topic. So for those of you who invest in the equity market, you might notice that there are a few stocks that are taking all the oxygen out of the room. They're called the Mag 6, right? And we've been hurt badly because we've been pulling away from them because of truly disruptive innovation. Now, they might, they will enjoy the fruits of innovation, but the companies we're investing in are not in benchmarks, and no one's paying attention to them because they're not. When I say no one, I mean in the traditional asset management world. If a stock is not in one of the broad-based benchmarks, they kind of don't want to follow it. The benchmark is the bogey, right? And so I believe we are witnessing the most massive misallocation of capital in history. I really believe that. Now, most people disagree with me on that in the financial markets. So that remains to be seen. So the one thing I would do is, sure, if you're in a very well diversified portfolio, as most advisors would suggest, you'd want some of the broad-based benchmarks and exposure to some of that. But if the world is going to be as disrupted as we think it's going to be, you really do need to be exposed to those companies, and they're down and out right now. Again, they had, and we certainly did in 2020. We had a massive run, and now our portfolios are at about a quarter of where they were at their peaks. That's how down and out they are.
Wow. And just in portfolios where we cannot hold ARKB or hold that's really the only instrument, or GBTC. We hold Coinbase. We hold Robinhood. A block for Cash App, and everything Jack and team are doing around Bitcoin, and even a little SoFi. We're looking for the digital wallet. That's going to be one of the biggest opportunities out there. And so that's the kind of smattering you'll get in our portfolios. You will not see those stocks in traditional portfolios. They're just too scared of them. President Bukele is really smart. Because emerging markets, what is the death knell for an emerging market? It is when they run out of reserves, capital flight, running out of reserves. And so if these emerging markets put Bitcoin on their balance sheet and it's appreciating as their own currency is falling apart, that is a beautiful hedge. And they're probably going to increase their allocation over time as they appreciate that this is a risk. And look what the trend of Bitcoin has been. Look at what the trend of most fiat currencies has been, right, relative to anything, the dollar or gold, and even the dollar relative to gold has been, a terrible investment over since the Fed came into being. So I think emerging markets are going to start, but people inside of emerging markets
need this insurance policy. And, you need, and I used to say this, and then I met KG, I used to say, all you need is an internet connection and a smartphone, and you have your insurance policy. You can buy Bitcoin. Now, I guess with not a SIM card, you can access Bitcoin. That's marvelous. Anyway, insurance policy against confiscation of wealth. Confiscation of wealth, that's inflation for sure. It's outright confiscation as well of wealth, as the prince's, MBS's cousins, I guess, learned the hard way at the Ritz Hotel. So wouldn't it have been nice to have that key, right? They had a quarter of their wealth taken away, something like that. So the insurance, the way we have gotten to our bull price target, and our bull price target, the probability on that has increased with the ETF significantly. And
what is that bull price target?
$1.5 million.
Let's go.
2030. Let's go. There are three major assumptions we're making there. That Bitcoin really becomes half the size of the gold ETFs. Right, or the
it's
gold
like $13 trillion as their market cap.
That, gold investments, so half that size. And the interesting recent statistic there, David gave me this the other day, is that if you look at 13F filings for the first quarter, this is mostly hedge funds we're talking about. For every hedge fund putting funds into a gold ETF or gold, there were 10 putting them into the new Bitcoin ETFs. That's pretty big, right? So that's our first assumption.
Okay.
The second is back to the emerging markets. If you look at global money supply and you take away the big four, maybe you shouldn't, but let's take away US, Europe, UK, and Japan out of the global money supply. If you assume that the rest of the money supply, that 10% of it is really reallocated to Bitcoin, it's really the money supply, right? And it could be through treasury, it could be through the treasuries of companies. It could be individuals trying to protect themselves from, destruction of wealth and purchasing power. We're assuming only 10% of that residual goes to Bitcoin. So these are conservative assumptions, I would say, right? And then the third is the institutional. These are the major ones. There are others. There's remittances and so forth. But so institutional involvement, we assume that 6.5% of all financial assets are allocated to Bitcoin. So in global asset allocation, this does include real estate and commodities and, gold and everything, but 6%. And the way we got to that number is that's, maximizing the Sharpe ratio, return per unit of risk, is maximized, and really, volatility is not a consideration. In that study, if you really care about it, you'd probably want to allocate 2.5%, but 6.5%. So, it occurs to me as I've thought about my education that, and not even before that, in the 70s when I was growing up in Southern California, my father, Irish immigrant, was an engineer but had no education, so really wasn't well paid. And so really we were on a tight budget. And I remember we went through that inflation of the 70s, and I remember my father coming in, and that's really how I learned what inflation was, by listening to my father. And it put a real constraint on our budget, what was going on. We're seeing a bit of an echo of it in the last few years, especially when you think about food. And then Art Laffer is my professor at USC, and he starts talking about this inflation and going off the gold exchange standard in 1971. And I was starting to put the pieces of the puzzle together. And I ended up, Art Laffer is known for his fiscal policy. So Laffer curve, right? You may have heard of that. But he is a monetary scholar. His mentor was Robert Mundell, who won a Nobel Prize for his monetary theory. And he's as passionate about monetary theory as fiscal policy. And so I grew to love monetary policy. I started my career and moved to New York 1980, and we were in the middle of this massive, we're double-digit inflation and interest rates. And we had Paul Volcker on monetary policy. We had Ronald Reagan come in. And, I was looking at the damage to the financial markets that inflation and interest rates were doing, not only to personal life, but to financial markets, and just how broad-based this mistake was and how many people it was affecting. And then, really, because of what I was doing at the time, I started in economics, had to make a call on inflation and interest rates. And so, again, I became... at that very early age, maniacally focused on monetary policy. And so I think what Bitcoin, when we did our first paper on Bitcoin in 2015, so we're going to look at any disruptive innovation. We actually started in 2011 at our prior firm, but started the firm at ARK at 2014. And we said, should this be one of our platforms? And we didn't break it out in the beginning. We had next generation internet as a platform. And then two things happened. We did the white paper with Art Laffer in collaboration with him. And he said to me, wait a minute. I've been waiting for this. I thought he was going to criticize and throw the bums out, in terms of the kind of paper we wrote. But he read it and he said, wait a minute, if this is what I think, this is what I've been waiting for since 1971 when they closed the gold window in the United States. And he was in D.C. when that happened. He was mortified when it happened. And he is feeling now that he can get redemption with Bitcoin. So I think his everything that my life experience, what he taught us, and my own experience in my career have caused me to love Bitcoin. This is an answer to a lot of the world's problems.
So there's Cathie Wood with her incredibly positive outlook on Bitcoin's future. As she said, Bitcoin is the answer to a lot of the world's problems. Bitcoin's decentralized nature builds trust amongst its users as it operates without control from any single entity. This transparency and resistance to manipulation can create a far more reliable financial system. Additionally, Bitcoin's fixed supply of 21 million coins offers a hedge against inflation. Unlike fiat currencies, which can be printed in unlimited quantities, Bitcoin's scarcity helps preserve purchasing power. Bitcoin's characteristics also makes it a potential store of value, often referred to as digital gold. As a store of value, Bitcoin can maintain or increase its worth over time, providing an alternative investment for preserving wealth. And all of those powerful qualities are why Cathie Wood believes that Bitcoin is bound for incredible growth and we all deserve to take part in it. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 60,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.